Hey, come here real quick. Zoom in and really take a look at this financing comparison. Do you really know what your cost of capital is? Because if you can't get a deal closed into the table, then it doesn't matter what the cost is. Throw it out the window. That's the true opportunity cost. So obviously, if you're using your own cash, you'll probably make the most amount of money on a flip. And if you're using a joint venture partnership, you'll probably make the least amount of money on a flip. So then it comes down to institutional back lender or a true hard money lender. Now, an institutional back lender is typically a little bit cheaper and might even require a smaller down payment, although they do typically have a little bit more expensive closing costs, but they lack in the flexibility, and they're also not the lender. They're closing the loan, then they're selling it off to the lender, the institutional back lender, and they're also probably selling the servicing side of it. Now, a real hard money lender, they are the capital source. They're the actual person funding the deal and doing everything. It might be their own money or fund, but they're controlling it, have the maximum amount of flexibility. They don't need appraisals, and they're overall pretty easy to work with. Yes, their cost might be a little bit more expensive than an institutional back lender, but if you actually zoom in right here, you're gonna see that the net profit on the institutional back lender versus the net profit on the real hard money lender is not that much different. So I challenge you, make sure you know what capital you're using per real estate deal. All of these do serve a purpose. Make sure you know which one it is so you don't lose out on an opportunity. This flyer will be in the description.